This is News Talk 980 CKNW.
Time now for our midweek Money Talks report. Joining us, the host of Canada's #1 rated financial show, Money Talks. It's Michael Campbell. Michael, how are you today?
I'm good. There's so much going on. I mean, I've been in heaven, Shane, the last few years, at least in terms of it's interesting times, as the Chinese proverb goes.
You know what? I have a hunch it's always interesting times when it comes to money.
Well, the way it's moving, though, the intensity of the change is absolutely remarkable. I mean, whether, you're talking about a Canadian dollar that sort of falls out of bed and then bounces a bit and, huge gyrations. It's really the volatility, I think, that makes things a little different today.
I know. I'm still kicking myself for when our dollar was par or even close. And I said to myself so many days, I should just buy some American money because it'll change soon enough.
Well, the listeners to Money Talks did, Shane, yes. So you've just you've been outed. You're not a listener.
No, I am now. But
there you go.
I'll get another chance down the road. It always tends to go that way. Listen, let me ask you this. I've been reading a lot today about the Organization of Economic Cooperation and Development talking to the government. They say they have to further tighten mortgage rules. I think I read somewhere where Scotiabank is I think their term was taking their foot off the gas. We've been hearing about this for, it seems like, years already.
Yeah, you're dead right. I mean, it really has been. I mean, I think probably since 2012 we get some big organization warning about our housing market. Of course, we haven't seen that downturn. I mean, you'd expect it at some point. But my challenge is that I think we're a little superficial about the housing market in Vancouver. Like I see, and you could go even more distinction than this, but say three markets. You got condos and townhouses. You got single detached, family homes in sort of the mid-range, $1 million to $2 million. And then you've got this upper end stuff that gets all the headlines and actually skews the average prices, I might add, too. Like there was a big story about the one for $31 million a couple of weeks ago. So I think that's really the challenge. Who should be worried, though, is anybody who's overextended. I'm sure there's some people who are overextended, in that way, and they have to just take care of themselves. But for the majority of people, they've watched their equity go up far faster than their debt level on that, and I think that has to be taken into account.
Well,
and then at the upper end, I suspect that a ton of the transactions are cash, and one of the things we did identify correctly on Money Talks well before this move started, as I said, that where capital flows, where it's leaving these questionable jurisdictions where people are worried about their money, whether it was Ukraine that moved $64 billion into the London housing market in 6 months in 2012, but of course the Chinese, they've been big buyers in Sydney and Melbourne, of course in New York and London, Toronto, and Vancouver. We've joined that second-tier destination, but there's lots of talk about that, but the point is I think a ton of those transactions are cash, so they're not really variable when it comes to what happens with the credit markets.
We're talking, of course, with Michael Campbell. It's the midweek Money Talks report. You mentioned something interesting that I have, housing is always a hot topic of conversation anytime more than two adults are together anywhere. And you mentioned an interesting point just about if you're in the market and you hear the stories about prices going up and up, you're right, the equity's building. So for the most of us, I guess it's, as you mentioned, it's all about leverage.
Yeah, so you just check out, and it's very straightforward. Okay, what's my mortgage? Am I on variable rate, fixed rate? How long is that? And can I afford, say, a 1% jump, like from, say, 3 to 4% in your mortgage rate? And if that's still a check mark, you're going to be good in this marketplace. And plus, by the way, there's no sign that the Bank of Canada wants to raise rates, but it was another thing that the OECD said today, encouraging the Bank of Canada to do that. I don't see that this year. The other side is this, though. Where you do get caught, and it might be investors, is when the market slows down, there'll be a liquidity problem. It won't be so easy to sell your house. You won't get knocks in the door. It won't be sold in 3 days, that kind of stuff.
Your real estate agent will have to work.
Some investors will get caught, especially developers. Every cycle you seem to get developers who overbuild. They're getting encouraged to do that by the very low interest rates. So, yeah, you could see some trouble. But the other side is this. When you're talking not so much Toronto, but Vancouver and the area, keep in mind we still have massive in-migration at this point, so we do need increased housing supply. So there's a ton of variables that go into it.
Before we wrap up, let's quickly talk. The country's finance ministers are going to be meeting in Vancouver this month to discuss the Canadian pension plan, talk of an increase, expansion, good, bad. How do you see it?
Well, first of all, we got to see what they propose. I mean, you could increase the top rate of which you contribute. So, for example, right now it doesn't go past 51,000. Let's say they go to 55 or 60,000. That's one way. They could increase the age of eligibility from 65 getting full benefits, and maybe they could say 66, 67. There's just lots of things they could do. The amount of payout and the amount they ask us to contribute and businesses to contribute, that's another variable.
Is that a key thing too? Because you talk about the economy and no one wants to have to spend more money or see more money.
Yeah, but you're right. I mean, this is one of the things that kills me, and I know we're short of time, but we don't look at what's happening. We look at that in isolation. No, let's look at what's happening all across the board. We got property tax increases at one level. Maybe you got, in Alberta, Ontario, they're increasing the taxation through their environmental carbon tax levies, and they're keeping the money. It's not like BC where it's revenue neutral, so that's more out of the paycheck that you're not getting put back in. I mean, the list is just a long one, and so you've got to be careful. You've got to look at all of the impact of all of the mandatory transfers to government and to see the economic impact, and I think it's too high. I think bottom line, when you look at all of those transfers, it's getting too high. That's one of the really big reasons that you're seeing such low economic growth or lack of recovery. How can we recover when we can't purchase because we're still giving away more money? I would bet you big time that for most Canadians, they've seen the increase in transfers of some level of government higher than their pay has been increased. So that's a negative.
Listen, Michael, thank you so much for your time. We always appreciate it.
Yeah, let me just leave you with one quick fact. I know you're busy, but you got to believe how fast the increase in Canada Pension Plan, the bureaucracy has grown. 2000, they had 6 employees. 2000 had 6 employees. 2006, 164. Today, over 1,000. Average compensation for the managers in 2000 was $220,000. By 2007, it was $1.56 million. In 2014, $3.3 million. That's another thing to keep an eye on for Canada Pension.
How did they even have 6 employees at only 16 years ago?
Well, they weren't as aggressive in terms of how they invested the money. That's one of the big things. But going to 1,000, watching that size of compensation, that should be on the public agenda too.
Listen, Mike, thanks very much. We appreciate it.
Okay, Shane.
Thank you. That's the Midweek Money Talks report with Michael Campbell, host of Canada's #1 rated financial show, Money Talks.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKNW.